So here we are with the part 2. Okay, where we stop is here. What we mean by adding the minor trend line, minor downtrend as we called. So we added that and we noticed that we have 2 more rejections here. So we saw it and we just passed the daily key level. Why is we got a downtrend at the same time. So if we are looking at the chart, we can also, as I said before, we can add a second trend line from here, from deep highest low to here. So here we have the second minor uptrend. So what this minor uptrend can do is, as we see, it comes so close. So we see that the chart has a pressure on it. In that time, you are going to start to read the bar formations. What does bar formation means? If we're going to give example, we can give this small bitchy here, if you see that, as a doji. If we give another one, let me get a hammer. Here we have a hammer. You can going to search it from the Google and you can find what does it mean, how will it move, or we can check also the spikes. So these spikes gives us that this chart just give us a hint like, okay, I'm going to be dropped, I'm going to fall down because I rejected 1 2 times. Again, made another deep. At the same time, it just made it here. What we draw, also I'm going to circle it for you to see what's happening here. We had a minor trend which crosses our key level, which we did in the first part. So this key level helps us to see what happened here. Here we had a rejection and it made another U-turn, which we draw from the upside. So this helps us to how to say it, pretend, or okay, this helps us, this supports us, our idea on USD JPay. So in this moment we saw another, as we say, from the minor trend, we saw a rejection and it moved up till our trend line, which we draw. Think that we don't have this part of the chart. Like, let me do it first, but then I will take it out. Like this part, think that we don't have this part, but we have the trend line. At that moment, we just going to say that, okay, it rejected from the daily key level because it was a strong resistance. At that moment, we saw a rejection. We waited again because we noticed that it might turn back and maybe break down. We saw another rejection. We can enter at that moment because we are going to make that rejection uh, second time, which means it will going to drop. Okay, it will going to drop. But if you're not sure, you're going to wait the third one for taking the guarantee. But if it won't make the third one, it will make the breakout at the moment. So uh what the fuck am I saying? It won't make a breakdown. Okay, it will make the third bounce from the trend, but in here, if we call it like this, if we draw a trend from till here, we will notice that it will be wrong because it will make this rejections. After the rejections, I'm just pulling it like this. We just noticed that it moved downwards. At that moment, why I told you that it will make its drop, first things first, it rejected daily key level. Second thing is, I just noticed that there is a spike over here. Also, we saw that the blue one has losing its strength. Blue one is, as we see, exponential moving average in 8 hours, and red one is moving average normally. So moving average was the heavy one, as we called, so we made it red. So what does those kind of lines means in here? As I told you before, it gives our confirmation. In here I saw that it lost its strength here. If we go through the 4 hour, let me do it like this and you will see that. Okay, in 4 hour, when we got the rejection here at 114 daily key level, which we put it, as you see, it went up, but after 4 hours, it again turned back and made its rejection from the key level. As I told you before here, 35, when it made the rejection, 25 pips. Till 35 pips, it may make its move. It will be consolidated. It depends on you how you call that thing. So, like, it has an elastic part here, so it may move 30 pips up, 30 pips down. Anyway, when we come through the 4 hourly time frame, we see the rejection first, but second, we noticed that in here, this part, we noticed that the blue line went down through the red one. So what does it mean? When something is heavy on you, like you're lifting a heavy weight, okay? And when it's under you, you feel like, okay, I'm strong. I can put my legs on it, or I can stay on it to see further. Like, okay, I will be up. So what does it mean here in the chart? If the red one, the moving average, goes under the blue one, like exponential moving average, you are going to buy. For example, here, blue one crosses the red upwards, so this gives you a confirmation. You can catch this bar from here, or even here, till you see something is missing, like here, okay? Like, you can, maybe you bought it from here, but when you see something like this, you can wait at the first time to see if it breaks down again, like for example, red one crosses the blue one, as we see here. You can wait that confirmation, or you can just close the position, or you can just take the partial profits and pull up the stop loss points. Anyway, these lines works like that. I'll just edit it. You can test it in your test account, in your demo account. It depends on you if you want to. Okay, when we turn back to the chart, which we have. So if you see, when we sell the USD JPay here, or even here, after we solve the rejection, when we get the confirmation, we can add another position, because this will move in daily, not the other ones, in daily at least 40 pips, 40 to 45 pips in daily time frame. It will make its move, and then it will consolidate. What does it mean is, here is the example. We got the, instead of spike, like, I'm just forgetting the spike, I'll just take it from here. It was at 113.60 till consolidation 113.6. So maybe, like, at least 40 pips, as I told. It made its 40 pips move more than 40 pips, like 60 pips. So when you close it in daily trading, you will get 60 pips from one pause. It will work like that. Anyway, I'll just pass the lines. I'll continue to analyzing. We are still on the technical analyze, okay, guys? We are still doing that technical to get the exact answer. Why? Because we are still on the daily one. So Okay, flying phone, so nice. Sorry for that. Anyway, we are going to move through the detailed part, which will show us where we will get in, where we will get out from the chart for the posing. Okay, I will just also take this off with the delete button. So here we are. We got a small picture here, which means we got a line at 111.78. What also most of the economists says that okay, USDJP will move till its support line 111.80, 111.80. Why? This is why we didn't use any indicators here. We didn't use any oscillators, any robots, anything. We just used one line to determine our supportive, our resistive area. So easy, and you can see it here. Again, I'm also just showing you where it has ones and where it has, you can take the spikes if you want. This part here, if you want, I will take it like that. So we have this line also and the chart. You can also add another one around here, this part. As you see, 113 dot, maybe 15, like that, or maybe 10, like 5 pips, 10 pips. As I said, it's elastic and you can adjust it how you see it. If I add it here, and if I said, okay, we have here as a rejection, 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 it depends on you. But these ones, when you add the horizontal lines, when you add key levels, and in hourly ones, in hourly, like 4 hours, 2 hours, 3 hours, it depends on you how you use the time frames. When you add them, it will just give us minor resistance, minor supportive areas. What does it mean? Like it can break up easily, or it can like hold it softly. It will move, it will break up easily. It's like a glass. It's like a glass. The others are like, this one is like, daily one is like a metal or plastic, and weekly ones and the other ones as like a metal, like a titanium, like I don't know, like a rock, like strong ones. Okay, so when we continue, if you want to add, I will add another one, but we will get it not as daily. We will just set, okay, it's a key level. So I knew that we have one here. Why we have here, I'll just zoom in and you will see what I mean here. So I'll just take the eclipse here, rejected. Oh, sorry, here it's breakdown and rejection at the same time. Continuing, this is the first one, breakdown. I'll just pass this part, our highest low, and then we saw another one here. Also another one here, kind of supportive area. Here another rejection. I'll just painted it too much, but I will delete it most of the time. I'll just trying to show you why I'm just taking the eclipses here to make you to show why we are using the trend, why we are putting them, why it's just passing through the trend, or just making breakdown, just making rejections for you to see how it works. So we have another one here, rejection and our fortress, and it dropped back. So we turned back to the analyzing. We finished up our key levels. This one, okay, it will start like that. Okay, so we finished up the key levels. So we are going to expect from here, from the where it made its kinda, let me add this one also. Okay, we are going to take from the top to the lowest part. What we are going to take is Fibonacci. What Fibonacci will have? What is what does it mean? What does it work for? What is this? Fibonacci helps us how to get into a position from which part, from getting which take profits. Like it determines us where we will take the profit, where we will get the exact point to put the stop loss. We are not going to put the stop loss like we are putting the horizontal, as we call key levels, as you call supportive resistive areas, or we are not going to put it like a trend line. Okay, we'll just add it from here to here, or it's okay. It's not working like that. When we are adding the Fibonacci, before adding it, let me put it like this. Okay, what before putting it, we need a confirmation, which means we need to see a guarantee for us to enter a position. What does it mean is we are going to check bar formations. I'm going to add here, okay, for entering a pose, going to look at first bar formations, which means you are going to add, you are going to see if they have some kind of head and shoulder formations. If you are going to note head and shoulders, which we have here, this part, like it's opposite, but it's head and shoulders still. Its hand starts from here. We got a shoulder, like we have a spike, but not too big. Rejection, as you call uh, resistance area, as we call, what was the word? I forgot it. Anyway, we got a rejection here. Again, it just stayed like that. It made its shoulder and another big move. We made its head with spikes and with kind of consolidated part. Like it tried to go, but it didn't. And we also found that we have another small supportive area. If you see that, we have here rejection, here rejection, here rejection, here from the lowest part rejection. So we have another one, 112.00. Okay, this will be our also supportive and resistive area. Anyway, so we made its head, here is shoulder, here is head, here is another shoulder. As you see, we made another small rejection here. So after the shoulder completes till neck, you are going to add a position. Okay, now we will take the Fibonacci retracement and we will add our position from here, from the top of hand. Okay, wait a minute, let me do it like that. From till neck, let me take it like this, till where its hand started. Okay, so when we add position here, you are going to buy from here. Okay, or let me do it like this, just a second, and I will add the okay, I will add two more lines. One is two. First one, 1.18. Sorry, 382, 1.618. Okay. So why did I added those ones is if it added, why didn't you add it? Thank you, thank you, thank you. I forgot it. I didn't see that. Sorry. One. I'm taking these points from its own levels, like percentage of 61.8, percentage of 38.2. Okay, when we add it, we will see that, and let me adjust it like this, you to see when we add the position. Okay, we have here stop loss. We have stop loss a bit tight, like 7 pips, a small one. And when you started from the 112.66, as get it 65, let's make it a bit, okay, like this. So we have, now it dropped a little bit more. We have the neck here, or if you get the neck here, if you get the neck here like this, let me show it to you. For the wider poses, you will get the stop loss at least 30 pips. And where, look where it stops. Where it stops means where our spikes finished, like not this one, but this two one, where it finished. So you can take these ones as a stop loss. And when you see that like this, you are not going to put your take profit to the 100% point, like 113.62. This won't be your take profit tree, because if you'll aim to take full profits, you won't get it every time. So when you started from the 1265, you are going to put your first take profit at 1302. So at least 40 pips to 30 pips. So it will give you a success rate of 0.75 to 1 kind of thing. If you'll mean from the 1, so you'll get 1 risk to earn 1.25, something like that. If you'll put your take profit to second one, it will be around 100, it will be around 61, this here. So you will add another 20 pips on it. So 60 pips on the bank. For the third one, which is not always working, is to putting the 78 percentage. Okay, percentage of 78.6, which holds 113.41, which is also nearly close to, if you want to adjust it, you can put it also at 113.50 point, which crosses with the trend. But sometimes, as we call, trend and horizontal lines may be elastic, like around 5 pips to 35 pips. So it depends on the move, how you get the chart, how you see the chart. Okay, so when we add Fibonacci, we will close it here at take profit tree. So you will get all these moves till up here, for example. If we turn back what I analyzed 2 days ago, okay, I'll just turn it like this. And when I entered, it was around 34.9. And where I think it will close is, I took it between this one, this rejection, which might make a trends another higher low, till this one, also this rejection. I just guaranteed myself with 3 rejections with minor, like another small horizontal key level. So when I added the position here, I put my stop loss to 113, not 58, but if it will break, I knew that it will kill our trades. So I just put it around 145. Why I did that is also it was the head of the, like it was the head of this red bar, which gives us that also from the exponential moving average, that it will going to lose its power. If I hold it like that, you will see that it's losing power with that bar. So I just waited the confirmation here. I entered through the pause around here. around with this spike. It dropped down at the night. It again came back. I saw a bit negative, but I was pretty sure that it was going to drop because I also guaranteed myself with the rejection from the main downtrend. So we had the two rejections here. This is the third rejection. I guaranteed myself with the third rejection. It won't make the fifth one. If it makes the fourth one, think that it will make the fourth one. And you opened up a position from 113.54, 53. Okay, so if it made its rejection, even if it moves till here, look what you have. You still have 10 pips. If it moves from here, you'll have 30 pips. It's still profit, but I'm not going to say that, okay, just wait the fourth one, wait the fifth one. If you see something like a guarantee for yourself, just get in. Also, I trusted again, instead of rejections, instead of the consolidation part just killed itself. No, I will stay it with free. Okay, we got another 10 minutes. Instead of the consolidation part, which I will show it to you right now. It started from here to, let me see that, 20 bar, like here. Okay, this is our consolidation part, which means we made a head and shoulders, and after that we made our move up till we finish up the head and shoulders. After that, it needs to consolidate. This is like you're a shepherd and you'll need to move your sheep till village. When you open up a pause, if you are big enough, you'll move the chart. When you form something like this, when you go through up, the sheeps will follow you. So if we draw another rectangle here, you will easily see that when the move finishes, it continues its move. Here is our drop to try to fix the chart, but it didn't help again, and it continues up. So when the market makers make its moves, some people accumulates the chart, like who starts what the other traders are going to do. They just start the fire, and others are just follow the market makers. After that, okay, after the consolidation bar finishes, I'll just enter my position from getting the confirmation from the moving average lines from for our also daily. If you see, we still have we just confirmed our drop right now. What does it mean is you still have chance, but please and please wait to open up a position after Xmas. After Christmas, we will analyze it together again, and we are going to say that, okay, it's time to get in. Why I'm telling you this is if we get this part as a rejection from the main trend, main uptrend, and if we are going to say that, okay, it's our new higher low here, it will move at least till our key level, which holds 112.80. So if we are going to see what will happen, I got two ideas on it. From now, it will break down like this, maybe like that, but it will, we just expect it to turn back. At that point, what will we do is we are going to wait its bounce till, let me show you, look, till 61%, which also, as I told you, it might be adjustable like this. If we make it like that, you will understand what I mean. Okay, so we have 111, 60, 86, but our key level is also 111.60, so 5 pips. So you can put your take profit here for 5 pips. Our second idea, which is a bit, let me do it like that, which is a bit risky, is hope you didn't open up a position here. I got it. I got one around 112.70. I added a position on short. So if we see the second formation, it might see till here. It might make its resistance area work, supportive area work, but at first we got a key level here. So I'll just expect it to rise till key level, and I'm going to watch it till if it breaks up or breaks down, etc. So again, I'm turning to Fibonacci. This is what I expect. I turn back to Fibonacci. For using the Fibonacci, I'm always waiting. Let me take it off and let me take our lesson here. Okay, for entering a position, we just check the bar formations, which one of them is here, like opposite head and shoulders. We can check the flagpoles. Here is a flagpole. If you want me to draw it, I can draw it. Also, we are going to wait breakdowns on trends and bounces back. So I will show one to you if I have, oops, sorry guys. Okay, if I see one, we can make it one like this. Okay, I'll just made it smaller, okay, to make you to see. We have here minor trend, right? Let me add another minor trend from here to here. I didn't made it a bit longer, but I want you all to see the fortress here. We got a fortress formation. What fortress formation means is it helps us to determine after this move, it will fall back. Like it will fall much more. Why? Because it just made its retracement first, but it consolidates with much more spikes. I saw it before in AUD Euro USD, and GBP, I guess. Out GBP out, I guess. I saw this move in not in 2 hourly time frame, in daily time frame, and I saw that drop like seriously, bros. When you have the fortress formation here, after this red bar breaks down, what does it mean is we will finishing the fortress. You can throw your rocks through the chart and you can hit its head. So you can add another position after here. If it makes a head and shoulders here, you can add another one after the neck finishes, and just put the Fibonacci retracement from head to shoulders toe. It will be a small position, but you can, if you just make it like this from the lowest part to the fortress's highest part, you will get the pips. What does it mean is you will put your take profit one at 112.65. So what does it mean is around 6 pips for a small ride, and second one maybe 10 pips, not much more. This is for a small ride, but it confirms also it will continue its dropping. And why I added this trend line is, I will show it to you. When I'm adding a trend line, I'm taking always deepest deep. If it's not hurting the chart, if it's not touching through the chart, if it's not doing the things like this, I will adjust it like that to make you see. Okay, I'm not going to turn through the 1 hour. If we turn to hourly chart, you will much more easily to see. But again, I'm telling you, don't use the moving average lines in the hourly charts to get the confirmation. Maximum 4 hours daily, but again, not weekly. Weekly will take much more time. Okay, so we are in the last 1 minute. I'm going to say that if you'll check that after the fortress, it break down, it made a bit much more move, but it made its bounce. This is also our confirmation. And check where it made our bounce. It made our bounce at our key level. So we are going to expect that it will drop like that. But this thing is going to scaring me. I'm going to watch the opening and then I'm going to discuss about this with you guys. Okay, we are at the nearly at part 2 and it is going to